Hello everybody, this is Jason Thornton coming to you today with some great information that's really going to help you close some sales in the home. So the topic of our conversation today is objections in the home. And this presentation is really designed to help you overcome the most common objections that you're going to run into. But there really is, just like there's 300 million people in America, there could be potentially 300 million different objections because somebody might say something wacky off the top of their head that that we're not going to cover here. Just keep in mind that if that happens and you need help with one of those objections, that to give your mentor a call, because again, this presentation is designed to cover the most common objections that we encounter. And I would say that 95% of the time, these are the ones that you're going to hear. So the most important thing to understand is that most of the time, I'd say probably 80% of the time, your clients are not going to tell you the real objection. They'll say something like, "I want to think about it." And your job is to ask the right questions that will uncover the true objections. Until you know why they said no, you will not be able to convert that to a yes. Think of yourself as a detective trying to uncover a mystery. I can't tell you how many times I've heard "I want to think about it" or something along those lines. And what I really call those objections is those are smokescreen objections. And until you understand why they're telling you "I want to think about it," the possibility of overcoming that objection is basically zero. So the good news is that you will make sales along the way even if you're brand new and have no idea what you're doing. 20% of the people that respond to our lead program will buy no matter what, because they just want life insurance. And 20% of the people will not buy from anyone, and the remaining 60% will buy from you based on your skill set. Work on your skills on a daily basis, and you will drastically improve your results over time. There's a great book that talks about this concept, and it's called The Compound Effect by Darren Hardy. And Noel was the one who told me about this book, and there's a lot of ways this book can help you in your life, including understanding how to improve your skill set over time. Okay, the most common objections. I want to think about it is by far the most common objection. Probably 80% of the time you're going to hear this objection. I already have a policy, or I already got it taken care of. That's another fairly common one. I go over all my financial decisions with my children or my spouse. I really want the coverage. Can you call me back next week? It's too expensive, or I can't afford it. These are really the most common objections that you hear. And some of these objections, you can eliminate them before they ever happen, and others, they may take you off guard. So as an example, I make all my financial decisions with my children or my spouse. You can cover this objection before you ever get to the in-home presentation by simply asking the client, is there anybody else in your house that helps you make your financial decisions, like a spouse or your children? As you're booking the appointment, you can eliminate some of those types of objections, where some of these other objections, they may catch you off guard and you may have to go a different direction on it. Let's take a look at the next one. Uncovering the real objection. When it boils right down to it, there are really only two objections. It really doesn't matter what they tell you. You need to figure out which objection is keeping you from helping them secure their financial future. The formula for making a sale in any industry is always the same. Value and trust equals a sale. So basically, the two real objections is either a price objection or a value objection. Those are one and the same. So in other words, they're telling you it's too expensive, or they're not getting enough coverage for what the premium is. Or the second objection is the client doesn't like you, or maybe they don't trust you, and you haven't spent enough time building rapport. It's important to understand that not every objection can be overcome. As we learned on previous slide, 20% of the people will not buy no matter what. Either they are truly too broke to afford insurance, or they think they should get something crazy like $1 million worth of coverage for $3 a month, and nobody will ever convince them otherwise. It's also important to take responsibility for every missed sale. This is huge. Place the blame on yourself. Use it as a driving force to improve your skills. When you start saying to yourself, nobody could have sold those people, or that was a crappy lead, or whatever it is that you might say that would take the blame off of your shoulders, what you're doing is you're taking away your power to improve. But instead, if you say to yourself, someone with better skills and more experience than me would have sold that client, you open up your mind to the possibility that you missed something. The search for the answer will often result in something that will allow you to make the next sale and improve your closing ratios. Now, I've taught this to people before, and they didn't agree with with the simplicity of what I'm saying here when it comes to the fact that there are really only two objections: a price objection or a trust objection. But you ask yourself this question on any time you miss a sale: if the price was 0, would they have bought it? 99.9% of the time, the answer is yes. So if that is yes, that means they want the product. They just don't want it for what you offered it to them for as far as the price is concerned, either because you didn't develop the why, you didn't find the need, or the client doesn't believe that the money they invest into the policy is going to generate a death benefit, because there are some people out there that are just truly skeptical. Or maybe they think for some reason or another, they can get a better deal elsewhere, or maybe something you did in their home just simply turned them off. And at that point, they're not going to buy no matter what. So it really is that simple, that it's either a price or a value objection, or it's a trust objection. And you have to figure out which of those two that it truly is. So first thing, let's eliminate the smokescreen objections. Okay? Most of the time when your client gives you the "I want to think about it," or "Can you call me back next week?" you can simply ask yourself one of these two questions, and it will lead you to the real objection. Most of the time it's going to be a price or a value objection. But the first question is, besides that, what else is keeping you from making a decision? Number 2, would you say that you're leaning towards or leaning away from buying a policy? And no matter what they say, just ask them why. These two questions really work, and you need to memorize these ASAP. These concepts come directly from the book, How I Raised Myself from Failure to Success Through Selling by Frank Bettcher. I recommend that everyone that is watching this video and is serious about an insurance sales career read this book. You can buy it on Amazon for less than $10, and it will make you millions. I actually looked on Amazon yesterday, and you can buy it right now for like $1.99 with $3 shipping. So it's the best $4.99 that you're ever going to invest. But don't just buy the book. Buy it and read it. The chapter where he talks about besides that, that one question, besides that, what else is keeping you from making a decision? That one question is going to lead you to the real answer more often than not, okay? Now let's talk about some particular closes. This is one of my favorite closes, and keep in mind that you're probably going to utilize multiple closes, because you're going to end up sometimes overcoming one objection and running into another. So this is a close that I do in a tremendous number of homes, but we call it the timeline close. And the timeline close is very effective in overcoming the "I want to think about it" objection, especially if you haven't been able to identify the real objection. Okay? But this is because the client is asking for more time to make their decision, and this close gives them just that, more time. So how do I respond when they say, "I want to think about it"? That's great. This is me. I say, "That's great, because the insurance company wants to think about it too." It normally takes a week for the insurance company to make a decision on your application. Then it takes about a week for the policy to reach you in the mail. Once you receive the policy, then the insurance company gives you 30 days to read through it and decide if it's exactly what you want. If you decide you don't want it, you can send it back and they will give you a full refund. That gives you about 45 days to make your decision. And by the way, if you ever decide to cancel the policy after that, you can. You just won't receive a refund for your first month premium. Do you think you'll be able to make your decision within 45 days? Client says yes, and then I say, great, grab your driver's license and let's see if we can get you approved. So this is a great close for those kinds of situations. Next one, delayed draft close. Many times if you have clients that truly want the insurance and the objection is a price objection, but it's in a slightly different way. These are for your clients who say, yeah, you know, I really want it. Can you come back and see me next week? They'll say something like that, but the reality of it is they're just too embarrassed to tell you that, you know, their bank account is overdrawn right now. Their objection is not that the policy is too expensive. They truly understand the value. Their objection is that it's too expensive right now. Maybe they had an unexpected expense, or maybe they live paycheck to paycheck and they have not budgeted in for this month. Sometimes they would rather tell you that they want to think about it instead of saying that they are broke and need to wait until next month. This is where the timeline or the delayed draft close shines. So that's a typo there. It's simple really. The insurance company will allow clients to buy a policy right now and have their first draft up to 30 days out. If the policy is a term product, the policy will go into force immediately on what's called a TIA, or a temporary insurance agreement. If it's a final expense product, the policy will go into force when the first premium is paid. If you simply explain to your clients that they do not have to pay anything right now, and we can draft their first payment on their next payday, you'll be surprised how many people will buy from you right now. And here's the great thing. Many of our products, such as our final expense products with Americo, if you're setting up the policy on a delayed first draft, they release your commissions to you immediately. Our other products, such as our term products and our universal life products, our core product line for mortgage protection sales, they're going to hold that commission until the first premium clears. So just keep that in mind. But with Americo's Eagle Premier and Americo's Ultra Protector series, those two products, you're going to get paid immediately, even though the policy isn't going to draft for up to 30 days out. And so sometimes when I'm running into, you know, hesitation from the client, which isn't a spoken objection, but they're still holding back, you're kind of feeling like you should be making a sale, but for some reason you're not. Or if the client says, do I have to pay for this right now? Sometimes those are all clues that they need a delayed draft close. Keep it simple. Sometimes the reason the client needs to think about it is because we have presented them with too many choices. Typically we do a 3-choice close, and this type of objection is more common on a mortgage protection sale than on a final expense sale. The choices on final expense usually are just base amount options. Maybe you're showing them $5,000, $10,000, $15,000. But sometimes on a mortgage protection lead, especially if the client is younger, the 3 options might be something like a 20-year term versus a 30-year term versus a 30-year term with a return of premium. And when presented with these options, some people might really want that return of premium, but their budget will only allow for a 20-year term. So they're going to say to you, let me think about it. They now have champagne tastes and a beer budget, and this can be challenging to overcome. The best approach to this objection is often the keep it simple approach. And what I tell these clients is there's nothing wrong with keeping it simple. All 3 of these options that I have shown you are written on the same application. So here's my recommendation. Let's go ahead and get you covered with a 20-year term, since it's the most affordable option. And if any time you want to increase your coverage to a 30-year or a 30-year with a return of premium, I'll gladly come back and help you do that. But there's nothing wrong with keeping the main thing the main thing. When you do this, you become their hero because you've recommended the least expensive option, whereas their expectation of salespeople is the opposite. They were expecting you to talk them into something that they cannot afford. And this honesty will win you massive amounts of trust. Okay, let's talk about price objections. Most of the time when you get a pure price objection, they just say, hey, it's too expensive. It's because their expectation is wrong. They're expecting a price that's not available to them, often because they've been misled by commercials on TV, or they saw an ad for an accident-only coverage, or they thought that that was life insurance. When this happens, the more you know about other companies such as AARP, Colonial Penn, credit union accident-only policies, Globe Life, etc., the better your chance of overcoming these objections. But in the beginning, this will be a great time to pick up the phone and call your mentor for in-home help. You know, there's a company that runs ads on TV all the time called Select Quote. And one of the things that they do is they will quote like a 45-year-old male, $500,000 in coverage for $15 a month. And those clients are the ones that qualify for like a super preferred plus rating. And typically speaking, those are on the shortest possible terms, which would be like a 10-year term. And that combination is generally not very, you don't see that very often. You don't find that many clients that are that tremendously healthy, and you don't find that many clients where a 10-year term actually fits their needs. Most people either need a longer period covered, or they're less healthy, or maybe they're older. But when people get those numbers in their head, it can really mess them up. And so that's why understanding those kinds of situations can really be helpful. And so I'm going to give you a little bit of information here on some of our competitors that you run into very commonly, especially with your older clientele, both on mortgage protection and on final expense type sales. So AARP and Colonial Penn often advertise policies. You know, you've probably seen these Alex Trebek television commercials where it says that these policies cost per unit. They advertise these policies at a cost per unit, and the clients might think that they can get their coverage for quote unquote pennies a day, because you've heard Alex Trebek say that you can get your policy for pennies a day. What they do not know is that a unit is $1,000 worth of coverage, and these policies have a 2-year waiting period. So these are graded death benefit guaranteed issue products, similar to what we sell Gerber Life, and those policies being sold in $1,000 units, they're more expensive than anything that we sell in that category, including our Gerber plans. So when you get a $10,000 policy, $10,000 in coverage, it's going to be far more expensive than our coverage with less benefit. Okay, so it's just they market it in such a way that it sounds like a great deal, and often these clients are thinking, hey, I can get that policy for pennies a day, even though they've never called them, found out the details, gotten a quote, or any of those kinds of things. So you're fighting against this expectation instead of the reality of what the situation is, and sometimes you have to explain that to clients. Credit unions, generally speaking, do not offer life insurance. Their policies cover accidents only. Now, a lot of times when you talk to somebody and they say, yeah, I've got a $2,000 policy with my credit union, and they give it to me for free, because of that, they may say no to us because they're expecting the coverage to be virtually free. But the reality of it is those policies are not real life insurance, and they're not going to have that coverage in place when they actually pass away, especially if they pass away from an illness. A good rule of thumb is if the client's not paying for it, they don't have it. Globe Life offers a term product that gets more expensive every 5 years on their 60th, 65th, 70th, 75th, 80th birthdays, and so on and so forth. And those policies, when the client is 90 years old, they expire. But it will be so expensive by the time they hit 80, they're not going to be able to keep it. I just ran into one of those last week, or maybe 2 weeks ago. Met with a client who already had a $10,000 plan with Globe Life, and when I quoted him a $10,000 plan with America, we were, of course, were higher. But he was 74 years old, and I said, okay, well, let's go ahead and call Globe Life and see what they say. Now, a big hint here is if you're meeting with a client during regular business hours, call these companies if they've already got insurance and let them say it to them. Because if you try to explain to the client that their Globe Life policy is going to go up every 5 years, unless you either have the contract in front of you, have their quoting materials in front of you, or you're on the phone with Globe Life, the client is probably not going to believe you, and you're not going to make a sale because of a lack of trust. But when Globe Life gets on the line and says, yes, sir, your policy, right now you're paying $50 a month, and oh, you're going to turn 75 next year, at that point it's going to be 109, the sale is going to be easy because the clients are going to realize they can't afford to keep these policies until they die. So when you have a pure price objection, to me, the best way to overcome it is to give them an example, then back it up with evidence. And so here's a type of close that I often use when I have a pure price objection. So I introduce a concept to the client, and the concept is insurance is like a commodity, because it is. The example I use is I tell them, because a lot of people may not understand the word commodity, but I'll say, here's an example. A commodity that most people are familiar with is gasoline. If you go to 10 different gas stations nearby, what you're going to find is that they're all roughly the same price. You will not find $1 a gallon gas and $10 a gallon gas. The price will be roughly within 10 cents per gallon of each other, and insurance is no different. And the reason why it's no different is simple. It doesn't matter what insurance company the person is buying from. The probability of their death isn't tied to who they're insured by. The insurance companies all use the same formulas for determining the cost of their products. And that formula is based on their age, their health, how much coverage they want, how long it's going to be in place. Those are generally the four things that go into that. Age, health, how much, and how long. Well, if the client is comparing apples to apples, the products are going to be about the same price. Where we run into problems in these situations is the client in their mind is making an apples to apples comparison, but we know it's truly an apples to oranges comparison. Our final expense level product that is never going to get more expensive, it's going to last for the rest of their life, is not the same as a Globe Life term product that's going to become more expensive every 5 years and expire when they turn 90. They're getting a greater benefit from our product, and because of that, yes, it's going to be a little bit more expensive for now, but down the road it's going to be a heck of a lot cheaper. So just keep that in mind. Now, the way I continue with this is I back this up with evidence. And the way I do that is I'll give them 4 or 5 quotes and show them how close they are. And this is going to surprise most people. And a lot of times it's going to tear down that objection and allow you to move on. But if I give them 5 different final expense quotes at $5,000 a piece, they'll see that, you know, maybe one of them's $23, one of them's $23.50, one of them's $25. It's roughly the same. It's not going to be like, oh, well, I could get it for, you know, pennies a day, so that means I'm going to pay $10 a month. They're going to realize how crazy that is, and how these misleading advertising, television commercials and whatnot have, you know, basically changed their mindset. Okay, and here's the final step. Bam, fam, your no sales. When all else fails and you have a client riding the fence, BAM FAM. BAM FAM stands for book a meeting from a meeting. When someone will just not make a decision, just say, okay, that's great. I tell you what, they got me working out here next week around the same time. I'll come back next week, same time, same place, and help you then. Fair enough? And if you can get back in front of these clients, you still have a chance to help them. But if you're waiting for them to call you, it probably won't happen. So you tried every way of overcoming objections. Finally, you get to the point where you just have given up on overcoming it. Bam, fam, your no sales. And here's the conclusion. There's an old saying in sales across many industries. I took my first sales job when I was 19 years old selling cars, and I learned this back then. There is no such thing as a be-back. And now in the car business, it's even more appropriate than it is in insurance. But this basically means that if you do not make a sale on your first sit with the client, the odds are fairly low that you will ever make a sale. If your conversation with them did not convince them that this is the time to get their family protected, how likely are they to make the right decision after the emotion raised during your conversation diminishes. This doesn't mean it's impossible to make sales from following up. It just means that your best shot is your first shot. Now, I do make sales from following up, and when I'm in my office doing other things, I work my follow-up over the phone, and I make quite a few sales by doing that, but nowhere close to the number of sales that I make on the first shot. In fact, I would say you're probably going to make 90% of your sales on your first sit, and the other 10% of your sales are going to come from follow-ups. But, you know, 10% of your income, that could still be $50,000 or $100,000 a year, just depending on how good you are. This business is based on the rules, not the exceptions to the rules. The rule is make a sale on your first visit. If you try to build your business on the exceptions, you're going to be broke and frustrated. Because of this, make sure that you attempt multiple closes and you make the client tell you no at least 5 times. Remember, be bold or be broke. These are just some of my favorite approaches to overcoming objections, but there are others. I recently attended a training where a top agent said his approach to "can I think about it?" And here's what he said. He says to the client, "No, you're 65 years old and you've been thinking about it for your entire life. You won't be any younger or healthier than you are right now, and next week you might have a heart attack or cancer, and if that happens, you'll not even qualify for this coverage that I'm showing you right now." He went on to say that he won't even leave them with a quote. When he leaves the home, he takes, with a no sale, he takes everything out that he brought in, including the information. Because he goes on to tell them that the information is meaningless unless they act on it now, because there's no guarantees that the insurance company won't raise their rates. There's no guarantees that you're still going to qualify. There's a whole host of reasons why the client may not qualify for that exact same plan. The only thing he leaves when he walks out the door is a business card. And so, again, there's a lot of ways to do that. And I can tell you from years and years and years of experience of not only doing in-home sales for myself, but also coaching other people, I've had countless individuals that have worked in our agency. And some of them do the same thing over and over and over and over and over, and they wonder why they struggle in this business. And that is that they don't go for no enough times. We had an agent on our team for a while that would call us after an in-home presentation and say, "Oh yeah, I've got fantastic rapport with these people. They loved me. I loved them. I showed them these options. They said that's the exact one. Oh, but we don't make any decisions right. When we see things, we sleep on it every single time." And he would say something like that every single time, and he would end up doing 10 appointments and selling 2 people, whereas everybody else in the area was selling 5 or 6. And the other 3 to 4, I mean, he would have those commissions counted. He knew exactly how much money he was going to make because, oh yeah, this time it's going to be different. Every single one of these clients is going to call me back. They're all going to do it. And the number of sales he made on follow-ups was next to 0. I mean, he would sell maybe 1 follow-up client every 2 or 3 months, but every single appointment he left, he called us and told us the exact same story. He was building his business on the exceptions. He was trying to be, Mr. Nice Guy and not ask for the sale. You don't have to pressure people to buy. You just have to present them with enough reasons, and they'll often buy themselves. Nobody wants to be sold, but everybody wants to buy. And sometimes this bold statement that this top agent shared with us at the bottom of the screen might be the last thing that you say to somebody on your way out the door. And some of you have heard me tell this story, but just a few months back, I had a client that I went to his house 3 different times, and on the 3rd time, he was sending me away. And I was working 3,000 miles from home in Portland. And I live in Florida. I was doing some appointments up there, and I was jumping on a plane like the very next day, and I couldn't come back and see him. So the first 2 times I knocked on his door, and he told me he was really interested, but can you come back tomorrow? I went ahead and said sure, because I could see that his house was full of people, and I felt like it was going to be hard to conduct an appointment. But on the third time, I just said, no, I can't come back tomorrow. This is the third time I've been here. And if we don't get it taken care of now, it's not going to happen because I'm going to be jumping on a plane. And we conducted that appointment, and we wrote a policy, and 13 days later, he passed away. So if I hadn't been bold and said, no, I'm not coming back again, this is it, number one, I wouldn't have made the sale. But more importantly, number two, his wife would be homeless at this point, most likely, instead of collecting a $200,000 check to cover that mortgage. And so sometimes you have to take yourself out of the situation and stop worrying about, oh man, could I mess up this client and eliminate a future sale? And sometimes you just have to be bold and make it happen now, because if you don't, you might be this family's absolute last shot at getting coverage before something bad happens. And if that does take place and you get a call from that spouse saying, hey, it looks like you met with my husband, did he take out a policy? If you have to tell them no, that's going to be terrible, because a year ago I had that exact conversation with the daughter of a client I had met with, and I was too weak to make the sale. So again, be bold or be broke, and protect those families and get the job done. All right, guys, with that being said, I'm going to end this call. I hope you guys all have a fantastic day.